Good morning, everyone. Welcome to Admiral Markets. My name is Chris, and we're going to take a look at Forex strategy in this webinar. Before we start, though, please be aware of these disclaimers. First of all, the fact that this webinar is intended for a global audience and may not be suitable for everyone. Please find out more about that and other details and conditions through admiralmarketsglobal.com. Select your country of residence and then contact an appropriate entity. Also, trading for exchange and other financial markets are considered high risk and may not be suitable for all traders and investors. Therefore, please seek the advice of an independent financial advisor for more information on that. This webinar is not advice and is for informational and educational purposes only. And by continuing watching this webinar, you agree with this disclaimer. So today we're going to take a look at the strategy. I propose to take a look at moving averages, and seeing how we can use them to trade, defining the trend, looking for opportunities, and see what we can find on today's chart. Looking at, first of all, probably the euro dollar. Oh, alrighty. So today we got FOMC statement. Later today, that is always, of course, a bit of a unknown factor. We have it 11 hours from now, so there's a lot of time still, I guess, but it is something that's coming soon, and we'll have to consider what kind of impact it could have beforehand, but also when it appears. I would say that from a technical point of view, I would almost expect a dollar bearish potential, in fact, but you never really know, obviously. It's going to be interesting. Some expect perhaps a rate hike in June from 0.25 to 0.5. So we are getting closer. So I guess the meeting minutes will give us a bit more information about that. Some others expect September. Personally, my own guess was always the first quarter of 2016. So I don't know. Maybe I'll be off, because it seems to get a lot of people think it's going to be pretty soon. So time will tell. This one will give a bit more information about that again. We also have pound meeting minutes, an hour and 40. And some other lighter news I can see. Alrighty, moving on to the charts. Let's take a look at the euro dollar. We talked about that one a lot yesterday, so might as well just quickly talk about that to discuss this in more detail. Yesterday ended up with a decent bearish candle. If we zoom in, you can see that the daily candle ended up with a close not far off that low, and what that means is that the bear stayed in control throughout that day. So we had a good intraday short yesterday. Anyone who joined the webinar maybe took that trade. I was saying that basically Monday, I was saying it looks that we're at our point that we can make a retracement from 114.50 to 112.50. The problem is that sometimes certain support and resistance levels look reasonably strong on paper, but then when price gets there, price doesn't react to it and it kind of pushes through. That can always happen. That's why personally, there's nothing wrong with pending orders, but sometimes if you use pending orders at areas that seem good, but then in reality, price just pushes through it because the momentum is so far. I think that's what happened with 112.50. There was also some news fueling that, by the way, for those that followed it. That apparently there was a mentioning of some statement already on Monday that wasn't released and stuff like that. Whatever it was, the momentum was strong, and price didn't react to 112.50. So if 112.50 breaks, the next support level, as we discussed, was 111, and after that 110. Now we're breaking through 111, so it looks like the next halting spot will be 110. So it looks like we have some 70 pips left or so before we reach that level, and after that I would expect a potential more serious bounce. 110 is a round number. It's a psychological number. It's a 50 fib. It's the bottom of a trend line. or trend channel, plus we have FOMC. So typically you're going to see probably some profit taking at 110 before the news event hits to exit that trade, whoever is short, right, to get some profit. FOMC, who knows? Bob might push it lower. I don't think we're going to need straight to parity. As we know, the Forex market doesn't like straight things too much. They like the ups and downs. But who knows? You never know. In the past, it was more common to get really like massive, more than 300 pip movements. Nowadays, not so much. I mean, 200-300 is already on the higher side. But let's see. Yesterday, I'll put on the moving averages in a second. But yesterday there was a good short. I personally took a short because I took two actually. I took one here upon this candle, this bearish candle right here, the retracement of that bearish candle, because that I was seeing the rejection from 114.65, and that bearish candle was the first sign. So then we got that the first kind of price action. So I took the short there. I exited at that 112.50 because that for me was the target, right? Logically. But then re-entered again around here because, as I said, my plan was to wait for this 4-hour candle to close. The wick was about 23%. It was just a tad more than my 20 that I said, but it was still, when I looked at it visually, still good enough. So, when I said those percentages, I just gave a rough indication. Visually, it looked good to me. It turned out to be 23%. But that was okay for me. That was the signal that we broke 112.50 with this strong candle like that. That was a big momentum bar. If you look at the momentum here, right, you can see each candle pushing lower and lower, each candle having a lower low, a lower high. Just a quick test. Is the audio okay? Is the audio good? Okay, cool. Thank you so much. Let's see. I'll write Jonas back. Alrighty. Great stuff. Thanks. So this was the biggest bar, right, within that momentum. Look at this. This is a good momentum bar, right? Especially at the beginning. Then we have an inside candle with the wick showing selling pressure. Then we have again a bearish candle, kind of a doji, bearish candle making a new low. Okay, it has a bit of a wick, but it's making a new low, right? All-time lower highs as well. So just a steady push. But then we got this big momentum bar without any significant rejection, kind of accelerating that thing. So the follow through that day was high. That's why putting a fib on this bar is what I did. I didn't take the 38.2 fib. I was looking for the 50. But what I did was, and now we can zoom in to the 50-minute. Actually, I took it on the 5, so we might as well go there. And this is what we were discussing yesterday is, oh, well, and yeah, both fibs are about the same. Is the fact that when you get this correction, don't take it here because you're going to, well, you could, but I mean, you're going to get that correction. And I think better to wait for that because then you can see it's a corrective correction. Otherwise, you really never know. It could always be an aggressive correction like this, a bull flag and an upside. Waiting for that bit of information here that it is a correction could be better, right? So in that regard, we get the correction, the red circle there, and when the correction broke, kind of a rising wedge formation here, the oscillator is back to the zero line, as you can see. We had the 38.2 fib bounce, which is certainly a decent retracement already, although I was hoping for the 50. And when a first candle pushed through that, which was, I took this one. Actually, this one was already breaking through it a bit. but I took the next one. I shorted it at 111.90 with a stop loss above the 50 fib, just in case, although a tighter one would have worked. All right, and we got the follow through to 111.20. Now I exited a bit higher. I had a trill stop, so I exited about 11.45, I think. So it was about a 45 pip win. But if you went for 11.20, 25, then you could have gotten maybe 70 or 80 out of it. So that was the intraday setup that we discussed yesterday. So those were the mechanics, how you could tackle that. This was my trigger here. Went right to the minus 272 target. So yes, this was a trade from yesterday. Let's see, Chirag. It was not based on the strategy that we're going to discuss today. It was basically just a discretionary analysis. The 4-hour chart is the confirmation in a way, is the decision, right? The confirmation of the momentum continuation, and the 5-minute chart is just used as an entry. Does that make sense? Kind of like the break here. So the 4-hour chart is kind of the reason to trade it. Like, okay, yes, we got the continuation, and then this is kind of why, or the entry and exit kind of discussion already. So great. There's some other comments. I'll get to those in a second. So that was basically yesterday. Now we're getting a continuation. What happened was someone asked me about whether I'm still bullish yesterday, and not anymore, because if you get this kind of momentum, it's you got to be flexible as well. Obviously, I was bullish at the beginning of the week when looking at this weekly candle, but when a 4-hour bar like this continues, is posted, and then you see a follow through, right? Then there was the chance. I talked about the London yesterday. Sorry for this long talk about yesterday, but I was trying to make it fast. I said if you have 5 or 6 bars not breaking this low, it could be worth a long, right? And you can see that even though if anyone did take a long, I didn't, because I still wanted to wait for the dust to clear and rather wait for this morning's open, personally. But if you did, around here, you did only lose about perhaps 30, 35 pips, which is still a very low risk compared to the potential reward. So it's okay, but I avoided it personally because of the fact that this is a strong momentum, and I would like to see at least some momentum here indicating a bounce, and I wait for the hook back. I didn't want to take a long if it just went sideways, because of the fact that indeed if it does go sideways, we have momentum sideways and we can continue with that. And if you look at the daily chart, because price went sideways on the hourly, we had a strong daily candle close, which indicates bearish pressure. So with the break of 38.2 fib at 111, I would say that we have now space to 110 from an intraday perspective. Alrighty, so that was all the stuff about yesterday. Let's throw on some moving averages. Now you can see when we look at the moving averages that price had a nice bullish rally, and the moving averages here, I'm not sure if you've never joined a moving average webinar, please let me know. Could be useful, but we have a 21 EMA band on the chart, and we have a 144 EMA close. And the cool thing about it is that you can see price basically here, of course, it had some downside pressure. You can see it move up to the 144, then use 21 as a support, then it breaks above the 144, keeps using the 21 as support until here when it moves back to 144. So 144 could definitely be a bouncing region, but you can sometimes see that it breaks a bit more than that, right? So I would say that from that perspective, 110 is again a support level, because then we've gone pretty far from that 144 EMA already, considering the fact that we started all the way here. So I wouldn't exclude the downside from an intraday perspective, but I'm just saying that we are reaching, there is a certain elasticity in the market, and you just can only push it that far on average. So that's why 110 is another reason why it could be a bouncing spot. So you can see that the 4-hour 21 band is bearish. So let's zoom in, and you can see that we had here on the hourly chart, perhaps even a short here, but we were too late in yesterday's webinar when the 21 crossed the 144 when looking at moving averages. And here we had another break, the break of this fractal after a pause at 111.20. So moving into the 50-minute world, you can see that the moving averages are aligned and bearish. And basically, when something like this is happening, you can look for taking breaks of fractals in the direction of the moving averages. So here too. Now we don't know, of course, how this is just an early break. It still just started. In fact, the session yesterday, I was talking also about the fact that the euro dollar sometimes has head fakes. Yesterday's 1-hour bar was so big that it wasn't a head fake, in my opinion, and it didn't turn out to be a head fake. It was a genuine push. When looking at today's candle, let's take a look. What kind of candle do we have? About a 50 pip bar, not a small one either. So I don't think necessarily that today will either be a false break either. And probably see a genuine push to lower ground. To be sure, we could look for again this 4-hour candle to close roughly like this. Look for small retracement back to the L3 here that we have at let's say 110.90, 111, about halfway, with a stop loss above the candle high at 111.53, with a target at 110.10, 110.28 maybe, anywhere in there. Depends how aggressive you want to be. 110.28 is a bit more conservative, obviously. We'd be targeting about 60-ish pips. Would be about a 1-to-1 entry. The other method could be to wait for the 5-minute chart like I did yesterday. Let this retrace to the 0 line and look for the break. Or look for the 50 fib. Same exact copy in a way as yesterday. It could happen today as well. If we look at yesterday's setup with the moving averages on, and I can answer Caitlin's question right away. I do use the moving averages indeed, and I use it in such that when I get a 5-minute impulse like this, I want this preferably to go back to the 0 line like this. And that's when I know that the retracement more or less is finished. So you can see prices moving away from the 21 band very aggressively. The 21 band is therefore moving away from the 144. Eventually, of course, it cannot last forever. So you get the retracement back to the 21 band. And then everything is aligned because when price breaks here below that band. Entry potentials are indeed the one I took, the close below the band, the candle close below the band, or a fractal break here or here also. So that's how you can enter using fractals and moving averages. Now, fractals, moving averages, and candles, right? So that's basically kind of what I'm looking for today. The advantage of waiting for that, because you can see it's already writing here. It doesn't mean it's over, but it has pushed already. The advantage of waiting for that is just in case this is a head fake, which I don't think a head fake, by the way, is just like a kind of a false sentiment at the beginning of the day. Just before, typically around London European Open. Just in case it is, and price starts to aggressively move like that, you never know, then we avoid shorts, because if you put pending orders at a fib like here, then you can get caught in that. Yesterday didn't seem so likely. Today not either. But the further we push down, the more likely it does become, because we do have perhaps some divergence between these bottoms. Nothing major, don't get me wrong, but slightly different again than yesterday. Also, we have FMOC. Therefore, waiting for the zero line, waiting for this correction first, I think makes even more sense than yesterday, if you follow me here. So, for those that were specifically interested in strategy and not analysis per se, then you can use the band and long-term moving average, let's say the trend moving average, to identify the momentum and trend, and you can use that to look for breaks basically in the direction of the trend. You can also use the bands for counter trend trades. Anyone who was looking for downside could have traded below the band here down to the long term, right? So you can trade away from the band. I'm going to explain the band in a second. Or you can trade kind of the reversal if of course you have enough kind of confluence for that, from the band down to here. That would be a reversal trade. So trading to the band is reversal. Trading from the band to the long-term moving average is reversal, kind of reversal 1, kind of reversal 2 for those like that. For those that like Elliott wave analysis, this could be, for instance, an ABC pattern, and you'll be trading A and C. All right, those are reversal trades using moving averages. For those that want to trade with the trend, this could be A or 1. In this case, it is 1. So if you're trading not reversals, then you wouldn't catch 1, but you would catch 3, and you would catch wave 5, because you're trading that away from the moving averages. That's how you can trade moving averages, away from them or back to them. The 21 bands are basically exceptional moving averages, EMAs, and there's a 21 band, 21 EMA close, 21 EMA high, and 21 EMA low. Those three make a kind of a zone of support and resistance. And a cool thing about it is that it's kind of like an area instead of one precise point, because with moving averages specifically, but probably in general the whole market, I think we're talking more about zones than 100% to the pip levels. And the 144 is the EMA as well, EMA close. And if anyone would like this particular indicator because it shows if the angle is bearish or bullish, it changes colors. If anyone wants this particular indicator, I can send it to you. Just send me an email. And I'm writing that down in the chat right now. Okay, good. So let me check quickly some other questions here. I consider a lower low the wick, the low of the candle, indeed, or a higher high. So I personally just look at whether it's cut or not, indeed, not looking at necessarily if the close is lower. I do know that some traders look at that, and I wouldn't say there's anything wrong with looking at the information. For my time factor rule, I don't do that though. Flavius, is the sound a bit better now? I'm not sure. Maybe it was just temporary, or is there some delay, perhaps? And let's see. That's it. No, one more question. Yeah, the 21 EMA close. Well, one could even go without it, indeed, and just use the high and the low. If you like that more visual. that's fine too. For me, the close is the typical one I use. So the high and the low are added. So I still would like to know where the close is. It's just for me, just for informational purposes only, because the 21 EMA close is kind of the main one. That's why. But anyone who takes away that one and just keeps like this, and just keeps this, to be honest, it would be probably just as effective, and maybe even more pleasant to look at, depending on how you like it. That's fine too. Right? So that doesn't matter. Or you could take away the band and only leave the 21 EMA close. But the reason why I have a band is just because of the zone it shows. 21 is a fib number, and it's used for other traders. Often 20 is used. 21 is close to that. 21 is a fib number, and it responds fast, but not too fast to price. I've used other fib numbers like 13 and 34, but I like 21 so far the most. No problem, no problem. So let's take a look at other currencies so that I don't hold up maybe too long this webinar. And then I'll take a look at your question, okay, Justinas? Let me, and Björn's question or comment. Let's see. So this is the euro dollar in my view. Pound dollar, I like the short too, but we didn't get much of a retracement. It was a strong candle and just a follow through right away. It was really not a pullback. I didn't trade this one. It was probably tradable. I don't know. We can check together. But anyhow, doesn't really matter. We did get the follow through down. Now, yesterday I was talking about 155, 155.50 being a bouncing spot. But personally, I would rather wait to the end of the day before trading that bounce, because the thing is that momentum can push throughout a day. It's kind of like the yesterday's momentum was bearish, and then the thing is that it can kind of keep that sentiment throughout the whole day and keeps pushing. And even though there's a pretty good level, a pretty good support level that has a good chance price will bounce at, because of that sentiment throughout the day, price will not react to it. If we wait to the end of London, we have kind of an idea how far it has pushed, and then along is at the end of the session is better, because then we know, okay, it pushed all the way to 154.45, not to the 155.50, 155.50 like I thought. And if you use then the time factor rule, like 3 to 5 candles, you're taking along at 155-ish instead of maybe the same level, but your stop loss, where do you put your stop loss? Because you don't know how far this is pushing. So if you put it too tight, you even end up with a loss here. Now you have certainly a very logical spot to put a potential stop loss. Whether along here is still worth it could be the same conclusion made as the euro dollar if you look at the daily chart. Pretty strong bearish candle here. So probably not. The sentiment has changed, and the momentum is pretty strong. With the pound dollar, however, we're still within the boundaries of last week's weekly candle. All right, so I would say that the upside potential actually on the pound is a bit better because of the fact that we're still above 154. So this is just general analysis. Now let's take a look at the moving averages. Oh, sorry, it's the wrong one. Oh, no, sorry, it's the right one. Okay. On this weekly chart, I'm using slightly different moving averages. They're actually a 21 EMA close. No, it's a 13 EMA close, and it's a 21 EMA close. That's just because of the momentum because the 13 and 21 are close to each other. So because they're so close, they should respond more or less the same. But when there is a gap, that means momentum is pretty strong. Because if price can push the 13 away from the 21, because the two are so close, that means there's a lot of momentum. Here you can see a gap, a lot of momentum to the downside. Here you can see a gap, a lot of momentum to the downside. Right? That's one way of doing that too. And I use that on the weekly chart because on the weekly chart, using a band, it just takes longer to see any information from that. Anyhow, price is getting close to the 144, which could be a level to reckon with. But also, if you use a fib, as we know, we're getting close to the 50. Now we have still a few pips left to the 50. So technically, we could still push a bit higher to tap that 50 or push through it. Daily chart, if we look at the moving averages, you can see price here moving to the 21 band, then to the 144 band, then breaking below the 144, staying below that 21, tracing above it, but then going back below it. And here we had the first kind of retracement back to the 144. Why was it more likely that it was going to happen here and not here? Because here too we broke above the 21 band, and here too. What is the difference between these two? Just a quick question here in between, and then we'll continue with the strategy. Does anyone have a guess what the difference is between these two moments? The blue arrow and the red arrow. Both cases, we see price breaking above this 21 band. Why was the red one more likely to succeed than the blue arrow? Justina says different momentum. Beverly says maybe reached a longer term support. Caitlin says big EMA touch, but that was of course already after the fact. I'm talking about the moment it broke, so that is here and here. So before it touched the bigger EMA. So I got some good answers here. The EMA was also here, also on the upside. So both were on the upside here in that regard. But indeed, the answer is that the fact that there was divergence, indeed, true. Because if you look at this AO, because this is all one AO, on the daily chart at least, it was higher than this AO. That means that the second break here had divergence. So that's definitely a warning signal that, okay, divergence is here and supports the fact that we can get the bigger retracement up to the long-term moving average. Very important. So Justin said different momentum. That's kind of the same oscillator. The oscillator just shows momentum. So true, different momentum, less momentum basically. Good job. Let's see. Edith said different AO2, AO position, AO on the upside, kind of, but that we don't know at that moment. So different momentum, different AO, divergence basically. And Beverly said longer term support, and that's definitely possible too. We don't see it on this chart, but it's certainly something that could have played a role as well. So then you see the move to the 144, back to the 21. You see price kind of getting squeezed between these moving averages like that, and then you still had one more breakup. Anyhow, so what are we now? We are kind of in a transition mode in a way. We are we're getting closer to the 21, and the 21 and 144 are on top of each other. So it's kind of a fragile point in the sense, like, do we continue up like that, or could we perhaps do like this? This is kind of a break or bounce spot. We don't really know. It's difficult to judge from this particular situation. So let's take a look at the 4-hour chart. And when we look at the 4-hour chart, we don't see divergence between these stops. That supports the upside still one more push up. And we can see that we retrace here, and this could be a similar retrace like that. We also reached the 0 here. This could be a retracement. So when the oscillator, for instance, here starts showing green bars again, preferably 3 of them, that could be the signal here for upside, to be honest. That's another way of tackling that. All right, like here, for instance, we had 1, 2, 3. Here, there's the third. Right here, that was the signal for upside. Here, 1, 2, 3. Right here, that was the signal for upside. Doesn't always work, but in the places where we want to, it's good. It doesn't repaint, and always stays the same. So, but if you always use it, of course, you have to use it at the spots you think it makes sense. I wouldn't say it's something you always want to do. Look here, you have 3 red bars, and it still continues. But that's because the trend is up. So then you want to be careful. You can also use it for rejections. You just need to make sure that when you use it for reversals, that you have enough confirmation of a turnaround. Here, the 3-bar red, right, was a bit early because we still got a little bit of a push before we topped out and then fell. So that's one way of tackling along, waiting for those 3 AA bars, okay? If we then zoom into the hourly chart, we can see that we're actually here in the downtrend already. But we know that the longer term picture could have that reason for a bullish bounce. 30-minute chart, we're between the L3 and H3, and we have bearish moving averages, obviously. So from that point of view, I would say we have a potential for follow through to the downside, really. If you look at the longer terms, the shorter term time frames, this still looks like momentum correction, and we could get a momentum. I would say the potential entry from intraday perspective is below this L3, below 154.44, with a target. Let's take a look with a target at probably the daily S2 pivot around 153. When we look at round numbers, we've broken through 155. Obviously, 155 was a round number 2, a psychological number. So we're kind of now in a hesitation zone, in the sense that we pushed a bit through 155, but it wasn't a clear decisive break of 155 either. But if we do push below 154.44, then we should be breaking the 155 number, and the next kind of psychological number is 152.50. So if we aim for 153-ish, it should be okay, definitely okay, because we're pretty good above the 152.50. Just in case it fails and kind of doesn't go all the way to 152.50, you still get the profit. I think that is a good breakout trade to the downside. If it doesn't push through 154.50, the only reason I would still take longs is if we start to see, I would say, momentum here and a bull flag pattern and then a break. That is something I could look for in the hourly chart. The bull flag, the momentum at least riding to the H3, preferably just a bit above it, or the H4. And then something like a hook back to the H3 and then bounce. But then we should see the H4 already kind of probably sooner or later make that bounce up again. So those are my ideas on the pound using these moving averages. Let me quickly take a look at some questions, because we have a few and I don't want to wait too long either. So we looked at a new pair, and after those questions we can take a look at a different pair. Maybe you have a preference. So if you do, let me know. Let's see, Justinus. Saucer trading strategy. I am not too familiar with it. Do you mean like the fact like it's like a saucer like this, like in the sense that you have, for instance, an upside like that, and you get you get an upside, and you see price kind of rounding a bit like this? Is that what you mean? I'm not sure actually. Let's see, Björn said I was short on a 5-minute scalp and fall all the way down to now, but just put Stop over 1 minute retrace. Have not used that before. Maybe it works. 1 minute retrace. Let's take a look. Yeah, we're making the 5 minute retrace as we speak. This could be already a shorting area. Maybe the 5 minute chart will not get back to the zero line here in this case, to be honest. Sometimes it happens. It doesn't always have to go to the zero line. It could make something like this, for instance, and then down, and then back to the zero line, and it could something like this could happen. And it will push a bit more, and then make another hook back, and then something like that. If you don't catch this one, there should be still this chance, but there's never a guarantee, obviously. But considering the momentum here to the downside, this could be just a smaller pause on the 50-minute chart before continuing lower. Personally, I'd rather wait for the 4-hour candle. I like 4-hour candles for decisions. The reason why is just that it speaks the truth a bit more, gets me less mixed up in fake outs. All the moving averages are EMAs, so exceptional. All right. Anyone have a particular pair in mind that you would like to take a look at? Let's see. From a fundamental perspective, was part of the pound's weakness due to uncertainty in the last few months about the election? Last few months. Let's take a look. Let's see. This downside, I think, was dollar strength more than pound weakness, personally. So I mean, the elections could have an impact, but I don't think that downside had to do with it in total. Let me say it this way. Caitlin is asking, if we wait for 3 AO bars, are we entering too late? Well, it depends. I mean, sometimes yes, it can always happen. But as you can see, 3 AO bars here, and you're entering here. So there's still a lot of space left. 3 AO bars, and you're entering somewhere here. So there's a lot of space left. So typically not much. You're catching kind of just the bottoming out without trying to guess where the bottom is. But of course, sometimes you are too late. If you use it for reversals, or the very last push in the trend, perhaps, those things can definitely happen. But nothing is perfect. So you got to I think, pick the spots where it makes most sense. If you use it for reversals, it could just be a retracement, for instance, for more upside. Like here, you have 3 red bars, a short here, but still see some downside before moving up again. Let's see. We have a webinar on Camarilla. It should be on the YouTube channel from Admiral Markets. So just go to YouTube or Vimeo and type in Admiral Markets in the search. You should be able to find the page. If you can't find the video there, just send an email to support or contact support. They should be able to help you with that. All right, I got more questions, but I don't want to keep the webinar too long. But the sell on the first break of retrace, yes. With the euro dollar, yesterday definitely. It's something you have to look per time, per case. But typically, it would make the most sense. Sometimes you see, for instance, a move up and you get a zigzag like that. That's something you have to be careful of. So if you do short the break, the first break, it's good to be aware that this could happen. Perhaps move the stop loss above a spot where the third leg could go to. Okay, let's take a look at the dollar CAD. Alrighty, dollar CAD has been pushing up. And you can see, I'm not sure, one second, let me try to fix this. I'm not sure why these, it's annoying, these camera low levels. Okay, try to get rid of them like that. Good. We had a retrace back from the 144 down to the 140, from the 21 down to the 144. We have a daily candle now breaking above the 21. So what we typically will see is either kind of this, do something like that. So I do think the longs are good, but we could see a bit of a dip before we move up again. Typically, we should see a continuation of the dollar CAD upside now. So we can put a fib from here to here, and anywhere around 38 to 50 fib could be a bouncing spot. $50 fib is even perhaps even lower, but any of these fibs, in fact. All right, because we are basically, we have the moving averages aligned here. So it's in a spot where we had a big retracement because it went all the way back to the 144, but now it's potentially breaking above that. From a 4-hour perspective, you can see that where on the daily chart we move back to the 144 to the downside, here we move back to the 144 from the upside, like this, because the retracement that we saw on the daily caused a 4-hour downtrend. So one way of doing it is letting this top out, let this go back to the zero line, and wait for a bounce here at the fibs. One could take the bounce at the fibs with candlesticks, or let this bottom out, wait for 3 green bars, and then take the long. In this case, what probably will happen, because if we do get a continuation up like that, we're probably going to see this move down to retest these moving averages, and once we start breaking above the 21 band, the 21 will cross the 144, something like this. This will be the 21 band. This is the 144, and then eventually this will cross, and you have the breakout on the 4-hour to the upside. So this is all I really have to add for the dollar CAD. The euro odd, let's take a look at that. Oh, there it is. The euro odd has basically moving averages that are intertwined here on the weekly, and we're definitely in a spot where a price is choppy and corrective, making a consolidation at the moment. And the daily chart is not showing anything that, and the 4-hour chart, not showing any kind of consistency here from a moving average perspective. From a moving average perspective, we can see that price is kind of bouncing around 144, but not really trending at the moment. So it's more of a range environment. So for range environments, moving averages work not as well. And maybe looking at other things makes more sense. Probably looking at this chart from a blank perspective could be a bit better even, because the moving averages are not going to really help us too much. Probably these lines are the main lines here for the moment. Obviously, those are levels that we want to keep an eye on. This could be a trend line to keep an eye on as well. It could be a bouncing spot too. So when you're using trend lines like this, a break above maybe these tops right in here, what is it? Let's take a look. 140.84, a break above 140.84 could see a breakout to retest 142.50. This could be a bullish breakout here within the range, and this could be a bearish breakout within the range. All within the range, because we're talking about a move up to test this trend line again, or move down to test this trend line again. So trend lines and tops and bottoms probably the most valuable here. Yes, let me take a look at pound again, pound dollar, and then pound New Zealand and pound odd. For Jen, let's see, pound dollar. There it is. Pound dollar, basically lots of bearish momentum, similar to the euro dollar, and in a potential bouncing area. When looking at this fib, we can see that these levels are potential bounces. Now, price is a bit halfway, so from that point of view, perhaps some follow through to the downside before we bounce is now likely because of that momentum. And if we look at the daily candle, we have a pretty strong bearish candles as well. Eventually, a push up is possible to retest the 50 fib of the weekly chart here, somewhere here, one bit higher, 159. From this point of view, I personally think that 155 is broken when price dips below 154.54. That could be the entry with a target at 153-ish. All right, the L5 basically, just a bit above the L5. L5 is 152.80, 153. So when price dips below the 154.44, we're breaking 155. The next kind of psychological level is 150.25, sorry. $152.50, sorry. That would be the downside continuation of this momentum scenario. Downside, correction, downside. If that doesn't happen, this could still be a bouncing spot. But I would like to probably see some more confirmation before taking along, to be honest. The momentum has shifted significantly due to this. At minimum, probably 3 AO bars here, but maybe not even that. Maybe that's not enough. Maybe even I would like to see momentum, pullback, and a break above the 4-hour fractal, which is a step kind of more cautious. In that case, we would need a push up, a push down. We get a fractal here on the 4-hour chart. That fractal could be used when price breaks above it. So at this moment, I don't have any level yet. It all depends on price action. So I don't have any particular level as yet. On a 1 hour chart, we could say that I would like to see an impulse at least up to the H3, H4 kind of area, a retracement, and then a break again above it. So no specific level at the moment, just more waiting and seeing. With this as in mind. Let's take a look at the pound is in, pound odd, and now also the AUD USD I see. We can take a look at that in D2 and the dollar yen, definitely. The AO, I think, works with all time frames, but definitely 4 hour chart is good. But I use it on the lower time frames too, sometimes for retracements. DAX, I unfortunately still cannot access. I hope I have to set that up. All right, that's it so far. Good. So let's continue. Just quickly observing some of these factors on higher time frames to get a general feeling about what's going on. Obviously, big momentum. Obviously, trying to push above this resistance. A bit of a wick at the top of last week's candle. Good moving averages. Good moving averages here. So kind of definitely a bullish sentiment here when looking at the weekly chart. Daily chart, we can see that we are having 1, 2, 3, fourth candle, as I said yesterday. So we are seeing perhaps the hallmarks of a stop of that upside, but it's only the fourth candle, and it did end up with a pretty big wick. So it's still too early to say if we can get indeed correction lower. We would need today, basically, if the day ends up bearish, the chance of that downside like this back to the moving averages and a retracement trade increases. If today ends up bullish, then perhaps a more upside continuation is likely. So today's candle I think could be important. When looking at the 4 hour chart, we don't see any divergence, so this could basically mean that we've made a retracement like here, and this could be the same. So we could perhaps see continuations like we did here, and like that again. Not as strong as this one probably, because this is the third continuation, which means potential wave 5 for those that like LED waves, and therefore the profit target to the upside should be limited to the top or the minus 272 target. Probably the minus 272 target. But we shouldn't expect this big of a move, because when we break the top, we'll probably see some divergence eventually kind of form, and we could see price hit the target and then retrace again down. So that is still in the cards when you look at the 4 hour chart, definitely. The daily chart we know also still has enough time for that. So what would be my signal for upside? In this case, we can again use the AO third bar rule, or maybe better in this case is a pending order above this fractal. The problem is that the stop loss would have to be used below the fractal bottom, which is a stop loss size that not everyone really likes, because it's a 4 hour world. So we're looking at a very substantial stop loss. Not everyone likes that. So this trade may not be for many of you, but it is a breakout swing setup. Entry here, stop loss here, and the target here. If we can take a look at lower to find if we can find something on a shorter time frame, perhaps. Once we get 3 bars here, I would say looking at an hourly chart for a breakout trade on the hourly makes sense. We're not there quite yet on the 4 hour, So now it doesn't make it's too early. But if that does happen, 3 bars on the 4-hour, then I think we can look for that on the hourly, a breakout potential. Now, whether you rather take the breakout here before the 4-hour resistance or after the resistance is up to you, obviously. But in my case, I both are doable. This one has the advantage that obviously you have the 4-hour breakout mode, and a break pullback continuation could always be interesting. If it fails, if we don't get the push up, if we don't break, let's say I don't have a close above the 21 band on the 4-hour, and we fail to break like this, then if it takes too long, and today's candle will tell us, then eventually we could see maybe the push lower. But today, I would say it's a bit on the early side. So rather wait. Pound odd, let's take a look at that. Pound odd was telling yesterday that break above this level would be good. I don't remember anything else. This looks like a good bounce. I have no idea if I talked about that. Probably not. If you did take that bounce, that was good. Good candlestick pattern here at the bounce, but it's a difficult one, so it's pretty choppy too. At the moment, still the same thing, I think. A break above this could lead to a bullish environment here on the pound odd. But this could also be a bouncing spot for back down. So let me take a look at some other time frames. So this bouncer break spot, obviously, we could take a look at the candlestick patterns on the 4-hour chart, see if we get a wick here, for instance, on this candle. That could be a signal to say, okay, I'll take a short down to retest this bottom. We also have a trend line like this coming in, so it's in general quite a bit of a choppy environment. I'm not a very big fan of the pound odd at the moment, but there could be reason to retest the low, or if we do break, to break to the upside. The break to the upside, there are several ways we can tackle it. I don't know if it makes sense to mention all of them. Maybe I'll tell you which one seems the best one to me. Probably a 4-hour candle with a decent close, a decent 4-hour candle that is above this trend line, has a close above this resistance spot, and a close near the high as well. And has a decent size of at least about 75 pips. It will probably not be this one, but probably the next one. After that candle closes bullishly above it, I would zoom into lower time frames to hunt for a retracement or breakout. Justin is great. So it is indeed the square root. I was kind of thinking it could be that, and Justin has got the confirmation that it is indeed a square root of 161.8, and therefore used as target. Cool. Great. So a bit of a tricky situation, I think, on the pound. I don't know. I'm not too enthusiastic about it, but if someone sees something that they, a trade idea they would like to discuss, just tell me and I can put my view on it. Odd USD 4-hour chart, also bearish, broke through 79, the 80 level, went down to the 79.50, bounced, but then continued. Now it's 79. So we are getting a break of the support trend line and this rising kind of wedge. Let's see. So the next support level is somewhere 77.50, 78 here, probably. So we have some more space for downside. Odd USD does look bearish, just like, in fact, the euro does. So I think there's nothing wrong with the same plan as the euro. Wait for this 4-hour candle to close. Wait for maybe small retracement of it. Doesn't even have to be too much. Back to 79, 79.10. Stop loss above the candle high at 79.35. Targeting perhaps 78.50 from intraday perspective. Let's take a look here. Stop loss 79.35, actually 40, sorry. Targeting 78. 78 or 78.60. We are, just like the euro dollar, back at potential support. So we could get a bounce after we make another dip, or even now, there is that potential for a bounce. Same scenario, basically. We'll probably get some intraday downside pressure, but in the long-term time frame, we're getting into an area where a bounce is, that the bounce could happen, right? So, got to be careful of that with the targets. If we don't retrace here, could even be a breakout trade below this fractal on L3. Let's take a look at the relative strength indicator to see if this would be a good trade. And the dollar is strongest, euro is weakest, but dipping it back up. Odd is falling. Odd USD could definitely be an interesting short when looking at the strength and weakness indicator. We took a look at the 5. Aussie is low and is falling. Dollar is high, but also a bit down. And the euro dollar is showing that zigzag danger. So AO is getting back closer to the zero line. Yeah, so the short breakout would be then in that case below 78.82 with a stop loss above 79.30 and a target at 78.10. But maybe even 78.30ish, 40. That would leave 50 pips, yeah, about a 1-to-1, because that's a monthly pivot and a daily S2 already. So that is a intraday breakout. The alternative, if you don't like intraday or that small time frames, would be just to wait for this 4-hour candle to close, wait for a small retrace of that candle to take a short with a stop loss above the candle high, aiming for 78, I would say. Probably trail stopping in the candle lows, the candle highs. All right, last but not least, the dollar yen. And the dollar yen probably completed the triangle. We have A, B, C, D, E. And now that we broke above D and above B as well, this triangle is probably completed. and we're seeing a breakout to the upside. We talked about the breakout potential to the upside above 120.25, and it's pushing. What I preferably wait for now before trading it at this moment is some kind of bull flag, in fact. That's how I want to tackle it. I want to see a bull flag and then the break. For those that looked at the wave analysis by any chance this morning, know that it was a bullish break of dollar yen. The bullish break of dollar yen concludes wave E and triangle, and you can see that basically that this triangle is finished a bit early. The E was short, and we're now in a impulse to the upside. And if you look within the wave 3, we're pushing up for wave 5 probably of a smaller wave 5 of wave 3. But let's see here, this morning there was still some space, but now we already fulfilled that. We went up after that point just a bit. You can see here there could be still something left, but not a lot. So I'd rather wait for a wave 4 retracement, bull flag, and then take it up again. Would you use the 21 EMA daily on cable as a point too long, or is it risky without confirmation above H3? Let's see. 21 daily. I know traders who do that actually. So definitely something that is done. Let's see. But that would be a long at 154, and that, from my perspective, from a discretionary perspective, I have some doubts if that is the best level at this moment. Would rather wait for a bit deeper retracement, like 153, 152.50 at the moment, or wait for today at least to just for today to see how today plays out, how today closes. Let me check something here. Yeah, in this case, the 21 band is typically used as support, and you did have very nice examples here indeed with bounces. But those are almost picture perfect examples. You know, it's definitely possible. It's starting to become a pattern, and it definitely happens more often. But I would still be cautious with that idea. I think if we wait for a daily candle like this, you can see we get a reaction, and then typically there's still a good space left. So I would rather be a bit more cautious probably. See how if we do break L3, see first of all how far this momentum can push. Like yesterday, it pushed further also than expected. Alrighty. Well, thank you so much for your questions and comments. Thanks, Justinis, for looking that up and getting that confirmation, that info. Thanks all of you for the ideas. Does anyone have questions still, maybe in mind? Tonight, Nana is going to take a look at candlesticks, I think it wasn't it? No, sorry, news trading. Tomorrow we're taking a look at candlesticks. So I hope to see you in those webinars. and hopefully we'll get some good trades. Be careful of the FMOC tonight. Let's see how the euro dollar is doing. You see, you're getting a bit of a aggressive kind of approach so far. That this is a bit, just as a last thing, this is a bit different than yesterday. You can see already the climb in it. That's probably because of the divergence that's here. So it's a bit different structure. So let's see how that reacts. This specifically, this is picking up now. So we're not getting kind of that bear flag structure that would lean itself to the short. So I have to keep an eye on this 4-hour chart and 1-hour chart. If it does make, for instance, some upside here and then a dip and an upside and dip, and you get a bigger bear flag, it'd still be a good short. But now it's you have to be careful with that. Keep an eye on the 5-minute chart. Let's see if it makes a triangle. Perhaps that could still be interesting for shorts, or if it does break to the upside for longs. So. Alrighty, that was the last note. Thanks again, and have a good trading. Cheers.